Hey, can everybody hear me okay? And is the video working fine? Okay, great. Thank you. So let's kind of jump into it uh, from this morning and kind of go over what the trade plan was and then look at how that actually played out in terms of in relationship to what the trade plan was. So just on the basics, again, the focus is on the first time into the zone, right? And some of the filters on looking at the first time into the zone are the size of the rotation, right? Time of day, and also the number of trades that we've effectively run. Okay, so uh, the first the first move that we had out of the gate, we did open at this 1742 level, and we rotated very nicely, actually up to almost 1747 right here. So um, at least textbook on what I do publicly, right? This area would have been considered an aggressive trade for one reason and one reason only, that the size of the rotation was small. Now, someone asked me earlier, well, why is it that I have the filter on the rotation? And I can tell you the reason for that very easily. Because occasionally, in certain markets, particularly the markets we had from October through, let's call it October, November, December, we kept having trend day ups out of the gate in open drives. And this first zone was getting smashed. Now, over the last 2 weeks, the white zone right out of the gate, even if we opened up right underneath it, has actually provided a nice rotation down. However, if you want to simplify your decision-making process, right, you have to skip over this because you don't have the safety of the size of the rotation. We don't have traders very stretched almost any way that you look at it. So I didn't take a trade here. I had a couple of my coaching clients took trades here. They obviously did well with it. And that also set up, you have to realize this setup, this move right here was the second move into the zone. This would still be considered the first move. This would be considered the second move, okay? So it made this move more dangerous. However, looking at the day, we talked about a couple of things. The first thing we were looking at was open drive up and open drive down. You can see right out of the gate, the first 15 minutes, there was no open drive in either direction. It was pretty much choppy for the first 15 minutes. We knew that we had data coming out right at 9 o'clock, and let me make this a little bit bigger. Get rid of the tick. Okay, that'll be easier for everyone to see, I think. So I didn't take the trade here, right? This clearly, what I'd said before market was if we opened up at this 1742 level and we drove straight down into 1738, 1740 level, that without enough of rotation, I would be cautious on this zone. However, because of the rotation that we got up, right, this essentially took us to 1747. 1747, you take out 7 points, that puts you at 1740. I thought that was a reasonable rotation. Even if you went with 8 points, it puts you at 1739, right? So anywhere from just past the top of the zone down into the middle of the zone was great trade location, okay? Again, the stretch here is what made this an okay trade. Obviously, I gave us the immediate rotation for 2 points. It took almost no time whatsoever. I was out. The reason why I was out, we're just below the white zone, and in addition, getting out of a trade while there's still opportunity, is excuse me, I apologize, I got distracted there for a second, is huge in front of news, right? I can take my 2 points to be gone, and I don't have to worry about this whipsaw that took place afterwards. Now, I did try to come in on this move, and if you look on a 1 minute chart, it's a little bit easier to see. I'll show it to you right here. Okay, so on a 1 minute move into this zone, I took a short. Here again, let me blow this up so you can see it easily. I took a short right here, and if you look carefully right in here, you'll see as we were moving up, especially on the second bar, third bar, we started to get divergence. It was very small and it was hard to call, but it was there. In addition, we were right in the middle of the zone, and I simply felt that this run up, when I get these spikes like that, I just didn't feel that the market was going to run, particularly when, if you looked at NQ at the same time, it wasn't even getting halfway back. It was still lagging behind. Also, I set to watching queue, which we'll look at in a minute. It was dragging all morning long, and it was leading us to the downside, right? So clearly there were sellers there, at least in the AM, and we were already trading. I made it pretty clear in the morning that I believe I said 34.50 was the key area for the market to hold, and we had violated it at this point. So I felt pretty comfortable taking a trade here. So one of my trading rules is once I get close to this 2 points, maybe I placed this order late. I had several clients who actually got hit on the bid here. I wasn't one of them. I don't know if I was simply late to the party or what the scenario was there, but I didn't get filled. And it was actually quite a fast moving market, and I probably would have taken 6 ticks if it hesitated for a second, but it didn't. So it really didn't leave me with any choice but to bring my stop down into this area. So the way I manage it, if I can't get my 2 points, I don't want to turn it into a loser. I feel like I've already gotten what I was looking for out of the trade, and so there's no need for me to stick around. And so that's how I was able to get out of this trade flat, is I just moved my stop. Obviously, I would have loved to survive this. The concept was right. We did roll over hard back to the downside, but one of the characteristics I had listed in pre-market going over it was that our range from what we had most of January and really a lot of December, right? Our daily range is almost doubled. Balanced days have been 15 points wide. These directional moves have been 30 points wide. That's double all the way around. So normally what I would also expect in that situation, so I've already pushed my trade rotations in this situation from 6 points to 7 or 8 points. So I've given it a point or two to account for what's already a large rotation given what the average is, right? At 6 points, and I've added another point or two just for an extra measure of security. Okay, so again, you don't have to have the rotation, but it makes life a lot easier at most zones. Let's flip back to the other chart real quick. And I'll go over what the NQ looked like at the same time here. So another item. The reason why the second time is dangerous, again, this right here, right? If we got probably lucky to get that 2-point rotation down, it avoided taking any losses. Congratulations, by the way, to you guys, my clients who were able to nail that. That was nice. But then also look, this is the second time into the zone right here. Okay, and this is always my concern with the second time. This was the opportunity right in here the first time through. I don't see this as much of an opportunity, and obviously the zone got blown right through. Now, the first time into this zone, okay, so this was the 34.32 of Monday's lows, and I did say that it's possible that we could simply blow right through. Now, the reason why I give those warnings, okay, or if I give any warning at all, I could simply say, I'm going to take every zone. I don't give a damn about what had happened in the past. However, I know the more times an area gets tested, the weaker it becomes. What I did say about this area was the 32 area specifically was that it was likely to get retested. I said it was likely to get responsive buyers. I went back and looked at the video, right? And then if it came down again, it was likely to get broken to the downside. So it got tested, and we got responsive buyers the first time in. Now, we never got back down to the downside, but no big deal there, right? This was a beautiful entry. Once again, I was out incredibly quickly. I got 2 points, and the deal was done. And then obviously it took off. When we moved up into this zone, okay, so this becomes a point I want to clarify. And again, I'm not giving any kind of major league secrets away, okay? If you'll look, and I have a video that on how to use the zones, the basics, right? If the first time the market moves down into a zone, this is the top. This is the first move into the zone. If it comes up from underneath, right, it's broken, comes back up from underneath. This is now the first move underneath. I expect a pause or a rotation. The only area that I get concerned with on a zone is if it gets trade action like this, where you have 2 sticks that blow up and then blow back through. I suspect that it's not a good location to trade. And the other is if it simply blows through the first time, right? Let's say this was the first time we got into the zone, it simply blew down through it. I would be cautious there as well. But in this particular case, this is the first time up. I took a trade here, and clearly it paid the 2 points to anyone who wanted to take it and then some. And if we move down the road a little bit, right, we'll see that this is actually, once again, and that's why I can't stress enough, I focus on the first time into the zone. If you want to trade the second time in the zone, that's great. But if you really look, this was the second time it attempted a rotation down. I don't even think it got 2 points. And then it finally blew through right at 10:30 in the morning, right as Europe was closing. I also made the point that when Europe closed, we would find out who was in charge of the selling. If I read it correctly, the market, European markets were down this morning. I don't necessarily take a very good look, but I accidentally caught a headline. So my suspicion or my thought process is that all of this was driven by a lack of buyers or lack of aggressive buyers on our end of the pond, and an oversupply of aggressive sellers on the other end of the pond. And if you'll go back and look in, gosh, I want to say it was June or July, right? We followed a pattern like this. The U.S. session would roll up like this. Europe would come in and sell it. We would dip down or gap up, actually, on some days, right? We would run it all the way up. Europe would sell it all the way off. And we followed this pattern for about 3 weeks, if I recall. And you can go back and look. You'll see it on a 24-hour chart. Hard sell-off overnight, hard run-up during the day session. Sometimes that sell-off would bleed into the first hour, and then we would push up the rest of the day. It was really a pretty cool market. You could have made a lot of money in it. Hopefully we may be setting up to revisit that again because of the turmoil in emerging markets. And so what that does is people outside of the United States, remember overnight the index is not tied to being balanced against the S&P 500, right? So there is no hedge there, right? It's simply people making decisions on that index for possibly no reason whatsoever. So what happens is by the time we get to the morning, everyone gets over here and goes, hey, S&P 500 index is just fine. We have nothing to do with what's going on over in Europe or over in South America, or really no one even really particularly cares about Puerto Rico and their debt problems. Not yet, at least, right? We don't care until it's really just a huge bomb blowing up, and then it's just a scary couple of days for the longs, and everything tends to shake out 9 out of 10 times, right? So that being said, literally, as soon as Europe closed, the sellers disappeared, and what you ended up with was a trap trade here. And if we'll look, and I have no idea where my, here we go, I want to pull this in just a little bit. And again, I went over the trap trade scenario. So here we are, Europe closes right here, and we're off to the races. U.S. buyers step back in. Even if they're not aggressive as the sellers have disappeared. They're off drinking their pints. We're off making our money to the upside, right? In addition, if you look, this was yesterday's low right here. We broke yesterday's low, right? We came back up, we tested, we rejected, okay? People who sold here got confirmation that they were okay. All of a sudden, we end up with a higher low, and we've now closed back above Tuesday's low. They tried to push it down. You can see right here, unsuccessfully. We now have a trap trade underway, and what are we going to do? Just like I outlined, we're going to attempt to go to the other end of the range. We fell just a little bit shy of it, right? The other thing to look for, right, is I said after 11 o'clock, it becomes hard to trade. This all here, all of this is a chop fest. Not because you couldn't have grabbed the rotation, okay? If you're a very patient trader and you thought 750 was your zone, wasn't mine, but if it was yours, right? So let's say you took the trade here. It all depends on what your target was, right? If you had 1750 to 1748, well, congratulations, you got it easily, right? But for those traders that were actually trying to capture this thing and make it roll over to the downside, right? I mean, look at these movements. This is 20 minutes where we're inside of a 2-minute range over New York lunch. This is 5, 10, 15, 20, 25, 30, 35, 40, an hour where we were trading essentially in a 2.5 point range for over an hour. Who the heck wants to trade that? I guess if you're trading for ticks, that's all right. But man, that's a hard way to make a living. It's exhausting, it's frustrating, and lots of mistakes occur in this area. Okay, so what I want to point out and what I want you to get the most out of this. First times into zones, even with small rotations, okay, I expect a pause at the least, and then I usually expect a rotation out of that zone that'll garner at least 2 points. Doesn't happen every time, but it happens a lot of times. If you add in the size of the rotation into your entry, right, this gave you 1 good trade, 2 good trades, which is the next point I want to bring up. If you can book 2 solid trades every day for 1 to 2 points, preferably 2 if you can, and you have a strategy for increasing your trade size as you successfully hit your profitable trades. And when I mean successful, you have a 70-80% win rate. Okay, that's what you have to maintain. But if you're able to do that, these are the only 2 trades that you need. As it was, there was 1, 2, and you actually got a third right here. That's 6 points. But if you average 2 points and you consistently increase your trade size, and you start at 1 contract, and even 3 or 4 months later, you're at 6 contracts, and you're averaging 10 points a week, right? That is a lot of money. Okay, that's 500 times 6. That's $3,000 a week. So think about it, and I hope I did the math right. Is that correct? $500, 10 points times 6. Yeah, that's $3,000. So think about that when you're trying to capture all these little trades, because even when I was setting up the trades in the morning, right? Once you got the trap trade, look at this. So it's clear that we have a trap trade going here, but look how high, right? You have to execute this trade. On the other hand, if you somehow left a trailer from here and ignored this, which you would have had to, right? And all of a sudden you end up with a trap trade because you didn't get stopped on the pullback, right? Now you know, hey, I've got a pretty good shot, as I described in the morning, of making this trade go all the way to the other end of the range, in which case I can end up with a trade from 1732 all the way up to 1750, a potential 18-point trade. Now, I can tell you, personally, I almost never capture trades like that. That's a 2 or 3 times, maybe 4 times a year I capture something like that, and basically when it happens, there's no rotation. It pretty much just goes, or I've figured out something special in the market that there's a special event, but I rarely get this, okay? I'm totally only concerned with these 2-point rotations and leaving a little trailer. Why? Because I can hit them usually above 80% of the time to maintain my profitability, and I can grow my account very quickly by increasing trade size. I didn't run a trade today after 11 o'clock. I was done. I simply didn't see anything that I was interested in. I stayed out of this chop completely, where people tend to give back their money from the morning session, and I don't care about capturing these 10 points. I've resigned myself to all of this, that I don't have to capture this stuff. Want to look at NQ really quick because it had actually an important setup there to help you with ES. Let me get rid of this here. Actually, I think I need to go here because I erased it off my other chart accidentally. Okay, let's get rid of this. And if we look here, we will see, okay, we opened up, right? And I explained that this area right here was essentially the white zone for the day, that that NQ had to get above this area in order to make an assault on Tuesday's highs and continue going up. So right out of the gate, and if you can't see that, I'll switch that over to candlesticks real quick. Okay, so out of the gate, we were unable to get above what essentially was the white zone for NQ. Again, I don't think I published my NQ chart today, sent it to a couple of clients, but I did mention in the meeting this was an essential, important part. And I also said, importantly, this 3450 was very key today. So just above, but just in general, I went through the volume profile and I pointed out why that 3450 was important. And I also pointed out that we could easily break Tuesday's lows and the swing lows, right? This is the low from Monday, okay? That we could break this, break below the low, and that if we could get back above that low right here, that we'd have a trap trade. And what would happen with a trap trade? Once again, very clear. We would push to the other end of the range, and that's exactly what happened. And most days, the way the market works is we open, we get a push on down markets, push up, down, then we come back and we close halfway through midday, and then it can do one of these 3 things. And if we look how this day went today, we followed that pattern exactly, and then at the end of the day, right, we had this little curl where we came back around. And so essentially the majority of today's volume took place in this area right here, And with the exception of this one little area, right, the market stayed in balance all afternoon, right? With balance, the easiest way to trade it is from the outside in, right? Outside in. So all of this after 11:30 in the morning was balance, and you had to trade it like balance and had to realize that there was a shift that had occurred after it recovered and that we were in balance. Otherwise, if you were trying to force a directional move, particularly if you were playing momentum, all that happens in these markets is you get sucked in on top and spit out on bottom. And then you short the break and it sucks you right back up and crushes you on the stop. And then it rolls back over. This is how this thing is designed to do, is to shake as many traders as humanly possible. Another thing that you could have done to help you determine that this downtrend was no longer intact was simply take the kind of connect the dots approach here and see that we had broken this downtrend. Not very pretty, but effective, right? Also, when we broke this 3450, and then this was Globex lows right here, and you can see at the first test of Globex lows, we brought it back up and reversed back down. As soon as we were below Globex lows, right? This is before ES had already broken down. NQ was already making new lows below the Globex lows, and that should have been a warning to anyone taking a trade to the long side on those second shots, right? That was going back up. By the same token, when it recovered above here at 10:30, above Monday's swing low, that was an indication that we had a trap trade going, and to be cautious. That being said, you got to remember when you're trading, there's so many variables. For example, I'm pretty tired today. I was up, I had a friend who's having a family crisis. I didn't get to bed till 1 in the morning. I made the mistake of drinking a cup of coffee at 9 at night. I may have been up till 2 in the morning. I don't really know at this point. But I wasn't sleeping very well. And so look at all the variables we're trying to keep up with. And this is a simple system. Outside of tick divergence, this is all you see on my charts. I don't have anything else going on besides that. And even with that, look at what I'm trying to keep up with, right? That you're trying to organize in your mind while the market's flying very quickly. Okay, let's list this for the day, and let's do it off of the ES chart. So I think that'll help. Let's see right here. Okay, look at all the variables you're trying to keep up with and why you need a clear mind. Number one, right? What is the size of the rotation into the zone? And where's the correct location within the zone based on that rotation? Number two, you have to make a decision, and hopefully you've made it before the open. Are you going to trade a small rotation into the white zone, or are you going to ignore it? You have to make a decision there. That's decision number two while it's flying. This decision can easily be made prior to the open. You should already know. And if the only variable is if we have an open drive up, right, the first candle solid green, I'm not taking it. But outside of that, that's fine. But know what the trigger is so you don't have to think too hard about it. The next thing you're doing while this is going on, right, you are planning your either scale out or you're taking it all out. Again, that's a decision that can be made prior to the market opening. Continuing with this, we have news coming out at 9 o'clock, economic data. I warned beforehand that the economic data has gotten volatile because the QE is in, what do they call it, tapering mode. Okay, so it's not an automatic give me that the government's going to throw as much money in. And you can see that there's now a difference in the way the market is treating econ data. And I can tell you this first swing right here up, like this is all the people, this green stick right here, this is all the traders that have gotten used to no matter what the econ data is, that we're flying up. Good data, bad data, because it hasn't mattered in about 2 years now what the data is. And all these people got a pretty damn nasty shock because odds are when you get used to it, you're not going to switch what's worked for you for so long. And that's exactly when the markets switch. That's exactly what swipes away your equity so long because, again, I want to stress, it's not that people have become great traders. They become great at trading one market. And as soon as that market's gone, they'll sit there and try again and again and again, trying to figure out why it is that they're losing money that when for months or even maybe in this case for years, right? A year, year and a half, this has been paying them so nicely and all of a sudden it's taking their money away and they're trading in a leveraged fashion. The money literally evaporates in weeks and it can be heartbreaking and devastating. And if that's the situation you're in, cut your size. Things change, the market changes. Listen to the events that are changing. The market's sending a pretty clear signal that something's changed. I don't know what it is. I'm not going to try to figure out what it is, but I am going to increase my rotation size to accommodate it. And it's telling me quite clearly that the average daily range so far for the last week has doubled. And I'm going to respect that so that I can keep my money growing instead of getting my butt kicked and taking big drawdowns. So you already have all that, right? News. How will the market react to news? Do I take the trade in front of news, which up until this week has been pretty much a sure deal, right? There's been very few downsides after econ. Next, you're also counting the rotations. First time in is this second time in. This is a lot of data to keep up considering how fast the market's going, right? Then you're considering, well, should I take Tuesday's low? It kind of got tested before market. We kind of went through it. Not sure. That's another consideration. Next, you come down into Monday's low. A lot of people have difficulty buying when there's big, nasty red sticks like this. If you're one of those people, you need to explore. I see these as opportunities. A lot of people see these as deadly threats, and they want confirmation beforehand. Confirmation is expensive in the futures market. Okay, there's plenty of times where, I entered here. I was already out here. Okay, and there's nothing that says we couldn't have just come in, right, out, and then just broken back down. Okay, absolutely nothing. As it was, I probably should have left a trailer here. I didn't. However, another opportunity, there's no need to regret, right? I needed to get reset because there's another trading opportunity for me right here. And that garnered 2 points. I'm not sure if I took NQ or ES or both out of this zone. I might have taken both, actually, now that I think about it. All right. And then finally, we're back above Tuesday's low. That's a clear trap setup. Again, not an easy entry. This is a high aggressive risk entry. Why? Technically, your stop's all the way back here, right? This thing can come back and test, come back above, and still go. This is a hard entry. However, if you have a trailer from here, or if you took the second touch for whatever reason, it was in your trade plan, hopefully, right? Once you recognize, oh, we're back above Tuesday's low, you've got to go, hey, I've got a good shot at getting the other side of this range. And that is just a fantastic trade. I would not have entered here myself, but you could. The other key area that I pointed out, and I want to flip and then I'll close it out, right? I pointed out that 1750 has become pretty important on NQ. It is right, 1750, 3550. Right here. 3450, I apologize, right? Well, it's right in the middle here, okay? This area has become important. And what's been going on? So I noticed two things that are of concern. First of all, we're one-timing all the way down, right? We continue to one-time down. We've tested below here. Now we've tested below once. We held the second time, right? But now we've tested below again. And we've continued to close above that, okay? So my concern was so now we're trading at 34.47 overnight. If we gap down below this 34.50 and hold, right, I would think that we have a good chance of getting another long liquidation situation. Last time we dropped, this particular drop was 100 points. I have no reason to assume that it can't do another 100 points in either direction. So if this is officially the 34.46 was the close here, right? So if I do 100 points in either direction, that brings me up to a possibility of this 35.40 to 35.60 area as a potential target. And by the same token, 33.40. And if I go look to the right, again, these are extreme targets, but certainly possible. And what do I find? What I want to know is what do I find down here at this 33.50? And what I find is that I would be at the bottom of this balance area right here. That starts at 3,400 and goes all the way down to 35.50. Am I saying that if we gap below here tomorrow, or since we closed below 34.50, that we're going down like that? No. What I am saying is I'm open to the possibility. I'm also open to the possibility that we get back above 34.50, that we could go to 35.50 as well. Neither one would shock me. Technically, we're still holding this level. Right here, we're just a hair below it. But at this point, we can go either way. And so I'm open to it, and I'm going to key off of it. NQ was weaker than ES all day. That has to be a concern. Anyways, that's all I got, guys. It's 3:30. I got a guy who's waiting for me to help him in a coaching session. If you have any questions or you don't understand something, let me see. CD has a question. Do you get in on the first touch of your zones or in the zone? Depends on the size of the rotation. Currently, I'm using a 6 to 8 point rotation, preferably 7 or 8. To the question, CD had asked, so I'm clear, is do you get in the first touch of your zones or in the zone? And what I can answer that question happily. It's generally the first touch, but I am looking for, as in this situation, let me get rid of this. Wow, there's no zones there. Hold on a second here. Let's see what I did with this. Here, maybe. Well, it looks like I may have just destroyed my own zones here. Let's try another one here. I'll just convert this over. That's what I get for being a little tired. Here we go. Let's widen this out. I have it saved either way, so no big deal. Okay. When I get to the zone, right, if we measure this, and let's open it up a little bit more, I'm always, so the answer to that question is it's always has to be, at least for these purposes, the first time into the zone, right? Here, I'm looking at the size of the rotation, right? I want at least, under normal circumstances or most recent circumstances, 6 points. I've now pushed up to 7 to 8 points, right? Now, so if I want 7 points from 42, right, that's going to put my entry somewhere back here at 49. So I'm going to skip this trade, or at least I'm going, unless I'm just an aggressive trader and it's in my trade plan, okay? However, this rotation from approximately 47, right, I take away 8 points from 47. That puts me at 40. Excuse me. If I go for 8 points, that puts me in somewhere in this region, right in here, right? So any of this would work, 7 to 8 points, and it gave me 2 points automatically. This rotation up, right, went from 38.50. The second one, by the way, 38.50. If I'm looking for 7 points, right, that means that the minimum I could take would have been 45, which, by the way, I did take. Okay, but that's why I didn't take the front of the zone. Again, I'm using the rotations to help me with trade location here. This is a 5-minute bar. You can't really see. You know, obviously we were very fast. You can't see the rotation down, but this almost garnered you exactly 2 points. I just didn't get hit on the bid. I may have been late getting my order in. Next, second touch into the zone, not interested. And then this is just a massive rotation, right? 1749. And by the time we're down here, this is 1732. We're over 15 points of rotation here, and I'm happy to lose money on every one of these each and every time. The first time in, that's just a big fat rotation. All I was looking for was 2 points. Clearly, there's a potential of over 20 points on that. 32, 42, 15, 16 points on this trade. So hope that clarified. So sometimes the answer to that is, depending on the rotation, I'll either take the front, middle, or back, and I'll use the rotation to help me locate that. Anyways, guys, I got a gentleman waiting. I hope this was helpful. If you have any questions or you don't understand something, if you send me an email and I can address it relatively easily, I'll be happy to do so. And I hope everyone had a great day and made money. Remember, everything after 10:30 in the morning, right, gets much harder. You can keep trading it. It looks tradable. Just most of the time, people tend to lose money, particularly after New York lunch starts. It gets hard. Not every day, not every market, but if you took them all combined, it's hard. So you can make all the money you need to make prior to 11 a.m. Central Time most days. So anyways, talk to y'all later, and have a great day. It's my pleasure for doing the reviews, guys. Have a good night.